Welcome back, traders and investors, to Benzinga's Pre-Market Prep, brought to you by MarketFi. I'm your co-host, Joel Alconin, along with Brianna Velasky, and I have Rod David on the line. He is the author of Futures Market Timing. We're going to take a look at the futures markets with Rod. Rod, how you doing this morning?
I'm doing great. How are you? Good morning.
Yeah, we're doing good here in the Motor City. So you got some interesting things to talk about here, and you're talking to a longtime bear here. So tell me about the massive topping pattern that you are seeing in the S&P 500 index futures.
The last time that I was on with you was February, and it was just a few days after what became the February peak. This isn't based on on fundamentals. If I looked at fundamentals, I think I'd probably be with you, just a perpetual bear then. We're trading intraday, long, short, several times in and out. So that sort of opinion stands in our way. But what I do want to do is maintain some sort of a bigger picture perspective based on the based on the technicals. And back in February, there was a technical setup that I described at the time, basically that a couple of pushes intraday, certain timing windows that needed to trigger, that didn't trigger, that told us we're heading down, and the next couple of weeks fell 3%. And since then, we've been trading sideways, very choppily. Even the new highs in the last couple of months have really just been, if you look at a chart of the S&Ps, really just fluctuating around February's high. Trying to get out above February's high repeatedly has failed. It hasn't gotten any real trending going. So it's uptrending. It's very deceptive. Higher highs, higher lows, but it's distribution. And so the topping pattern goes like this. At this point, the next time you see a squeeze to new highs, a blow off, some sort of capitulation by bears, you're pretty much looking either within a day or two or within 5 to 7 days, one or the other, of then reversing back down. And if, in fact, it's the pattern that I'm looking at, it's a pretty substantial reversal down and pretty aggressive, too.
What if you don't get that squeeze? What if you don't get that run up back to make a new high to 2134 level? Then, where do you short it on weakness?
Yeah, there's three directions. There's up, down, and sideways. And so if you look, again, back to the chart on all of these sell-offs, they've all had their own triggers, but then they've all come into support. And again, back to the timing windows, the times of day that those support tests have taken place have indicated that those sellers, what I call sponsorship, has been weak-handed and not able to, or interested in pushing price lower, in actually triggering a downtrend. Right now, for instance, we're back to the lower end of the past couple weeks range. Since Memorial Day, we sold off. We've been in a very choppy range. S&P's back down to, say, 2096.50. I had a probe a couple nights ago down to 2094. If, in fact, there's a break lower, if in fact, like last night, we traded down. If that wants to break lower, then we're going to 2080, 2081. Does that mean reversal down? No, that means just testing support and then from there probably launching. So if you want to short something in the near term, I'd say a fresh low, a break under last night's low gets you probably 200 Dow points in the near term, 20 S&P points. But if you're looking at shorting, if you're looking at selling for a bigger break, if you're looking at selling for a bigger break in the trend, then you've got to unfortunately, it's not going to happen from here. It's not going to be signaled from here. There's still so much support to work through just to get down there.
Do you use the overnight highs and lows as good parameters in your trading?
No.
You do not?
No. No, and I use, back to some of the jargon or just the perceptions that I use, such as sponsorship, weak-handed, strong-handed. Overnight is so lightly attended that I don't consider the participation to be stronger hands. So the highs and lows that they establish, with some exceptions, just aren't going to be relevant to me in identifying patterns, using those highs and lows to make measurements, Fibonacci extensions, etc. With some exceptions, what I call do Globex trend extremes that have to have a specific characteristic to them. But otherwise, no. Is
Okay.
there something specific you're thinking?
Yeah. I mean, I really pay close attention to them because I think the first thing that you noted, if you do take out like the pre-market low, a lot of times you do get follow through from that area. On the other hand, if it just teases that area, like if you come down and you cannot, break out, like let's say you dip down to 2101 or 2102 or whatever, it kind of provides a lower risk entry. Perhaps if you're going to try along, or cover is short, because a lot of times you see follow throughs. Like for example, that earlier in the week when we hit 94 even. There was a weekly low at 96 and 96 even, so I took that out. But during the regular session, it came down to 96 and a quarter, provided support. You never did take out that pre-market low, and you got a nice reversal. But that's something that I've just noticed. Let's talk about the gold market here, and been in a 5-day trading range, tested both ends of the range here. Give us your long-term and short-term perspective on the gold market.
Before I've got a
Hey, Rod.
Rod, are you still there? Can you hear us?
Hannah.
We hear you going in and out here, Rod. You want to?
All right, I'm right here. Can you hear
Okay,
me now?
I can hear you now. Okay, go ahead.
Okay. Your office must be moving around.
Okay.
The gold market, just right now basis August. I've had a long-standing target in the 1150s. We had a detour up to 1230 from 1180 about a month ago, and since that detour, we've been heading straight down. Triggered another set of hinting fresh lows, and we're potentially this is the leg that gets us to the 1150s. It's looking pretty aggressive.
Yeah, I mean this. I mean, what would be? I mean, this needs a catalyst. I mean, doesn't look like interest rates are going up. I mean, what could be the catalyst?
Yeah, I don't know. It's when you get into the fundamentals and when you get into something like gold that's going to have multi catalysts. You've got so many relationships, and some that you aren't really used to dealing with, like country defaulting, currency. Right now, for instance, the dollar is down against the euro over the last several days, and yet you don't see that kind of performance, or at least not to the same degree, among other currencies, other crosses with the dollar. And I don't want to get too granular on this right now, but if you then do the country by country or currency by currency analysis for gold, you can see that trying to peg it to the dollar probably isn't going to be very helpful right now. Not a lot of consistency.
Okay. Okay. Let's move on here. Just taking a look at the euro dollar, the U.S. dollar here. Give us your long-term and short-term forecast for the euro. Okay, we are definitely having some technical difficulties here with Rob. This is a gremlin day, so we are just going to go back here to the markets here. We are 2 minutes before the open. S&P futures are trading down 1050 here. Pre-market low 2099.75. We'll be keeping an eye on that. We do have some good movement in some individual equities here. Let's take a look at Twitter here. I wish, does anybody have what the buy-in balance is here? Because we just got a nice pop in pre-market trading here. Let's take a look at what the high is here in Twitter, trading up 18 cents. Pre-market high was 37.30. So we're having a huge range in this issue so far today. FireEye, that's trading higher. Let's take a look at that. And then after FireEye, we're going to go to Brianna, who has some commentary on Groupon. FireEye has a deal with Visa here, getting a nice pop up in the pre-market. And let's see where FireEye still trading up $1.55, $1.51. Let's see if we can get.
Everybody there?
Hey Rod, yeah, we seem to be going in and out here. I'm sorry. Could you were giving us a commentary on the euro and the U.S. dollar?
Yeah, just basically, I appreciate you getting back in touch. Basically, that the euro is either within a day or 3 days where a pretty good corrective bounce would be complete, and the next down leg would be likely to begin.
Okay.
And it's been a pretty big bounce. It's been a pretty big bounce in the last week and a half. So I would assume the next down leg's a doozy if, in fact, this is a corrective bounce and it's about to end.
Okay. All right. We've been on the line here with Rod David. He's the author of Futures Market Timing, giving us his outlook on the S&P 500, also the euro dollar and the gold market. Is there any other commodities on your radar?
Yeah, absolutely. I cover all futures markets, precious, except for grains, softs, livestock. But we'll look at coffee, anything that's got controversy to it, or a lot of inputs that make it fluctuate.
Okay. Well, let's just run down here a few of these commodities while we have you here. Coffee, that's a pretty volatile issue. Give us your outlook on the coffee market.
I actually haven't found anything of interest recently in it. I can take
Pull
a
it
real
up and
quick look here. And yeah, I mean, just there's nothing really predictive going on in coffee right now. I would say that in the last couple of days, it's looks like it's set a high here, 136.10 this morning. In fact, if this bounce were to extend to 140.85, I'd be a seller for a dip back to 134.
Okay. All right, Rod. Well, thanks for joining us. Sorry about the audio difficulties, and we'll speak to you again soon.
All right, guys. Have a good morning.